All right. Hi guys, my name is Mr. Motswane. Welcome to Accounting with Motswane. That is the name of my channel. I don't know, I just came up with that, right? So this is the first video for the channel, right? Now, in this video, right, or in this lesson, we'll be focusing on what? We'll be focusing on the cash flow statement, right? We'll be practicing the cash flow statement together, specifically the 2025 Gauteng project, right? We know that in term 2, our SPA, it's the what? It's the our term 2 SPA, it's the what? It's the project, or it's a what? It's a project for 100 marks made up of the cash flow statement, as well as your analysis and interpretations, as well as your corporate governance, right? So in this case, or in this lesson, or in this video, I'll be just maybe helping you understand the cash flow statement a bit more. Already you are taught at school, already you know it and you understand it. I'm just going to add on what your teacher has already taught you right now. I am going to paste the screenshots of the question paper on the screen, right? I believe on the bottom right as well as the bottom left, so that as you're watching me doing the calculations here in front of your screen, you are also referring to your bottom right and your bottom left for the information, right? Yes. So now, the first things first, 1.1.1 of the same question paper I'm referring to, you are required to prepare the what? The note for the cash generated from operations, right? We are required to prepare the notes from, or the note from cash generated from operations, right? This is the format of your cash generated from operations. We have the net profit before tax, adjustments in respect of what? In respect of your depreciation and your interest expense. Then we have your profit before changes in working capital. Then you have your changes in working capital. Under changes in working capital, you have 3 working capitals. You have your inventories, your receivables, as well as your payables, right? Changes in inventories, changes in receivables, and changes in payables, right? We want to know how these working capitals changed compared to last year, right? Now, let's start. We start with net profit before tax. Before we start okay, now, in fact, there's no before we start with. We are starting already. We want the net profit before tax. This is what you always need to understand. We have what we call before tax, which is always equals to 100%. We have tax, in this case, it is equivalent to 28% according to information A. Then, after tax. So we know that if our before tax is 100% and our tax is 28%, it means our after tax is 72%. What we want over what we have. What we want, or what are we looking for? We are looking for the net profit before tax, meaning we are looking for the 100. What do we have on the information? Information A, we have the income tax for the year for 234,080, and about 28% of the net profit, right? Meaning that we have the income tax of 28%. What we want over what we have? We want the 100, we have the 28. So you say net profit before tax, you open brackets, 234,080. This is your income tax multiplied by what we want. We want the 100. What we have? We have the 28. You close your brackets. When you punch that in your calculator, you get a net profit before tax of 836,000. That is how you simply calculate your net profit before tax. These notes are very, very important, right? They are very, very important. I hope you did copy that down, right? Then depreciation and interest expense, it's a matter of what? It's a matter of copy and paste. We have a depreciation of 95,600. 95,600. Interest expense also already provided as 123,000 on the what? On the answer book, right? It is already provided on the answer book as 123,000. Now, next step, we have to calculate our net profit before changes in working capital by saying net profit before tax plus depreciation plus the interest expense. Then I'm just going to reach for my calculator. We want to say net profit before tax of 836,000 plus the depreciation of 95,600 plus the interest expense of 123,000. We have 1,054,600 as your net profit before changes in working capital. 1,054,600. I think my marker is running out, but I'm glad I have a lot of options in front of me, right? Then step, or the next step, right? Next step, we now have to calculate our changes in working capital, which is whereby our inventories already they are provided. We just have to prepare the receivables as well as our payables. Right now, before we start with our receivables, now here's what I need you to understand. Right now, when preparing the the cash flow statement, right? When preparing the cash flow statement, the information is given in a form of a balance sheet, right? The information is provided in the form of a balance sheet. As you can see on your information B, you have the balance sheet as your information. You have the balance sheet for when? For 2023 and for 2024, right? This is why we say changes in working capital. We want to know how that specific account changed from last year to this year. Did it increase or decrease? Did it result in a generation of cash, or was it an outflow? Was it an inflow of cash or an outflow of cash? That is what we are simply trying to calculate, or that is what we simply want to know and understand, right? Now, here's what I need you to always know, right? When it comes to your inventories, right? When it comes to your receivables, sorry for the mistakes, guys. It's my first time recording a YouTube video, so I'm a bit, right? So when it comes to your receivables, right? Here's what I need you to understand, right? I repeat, for the changes in working capital, right? For the changes in working capital, your answers, they either have to be, or your answers must be an inflow or outflow. Your answer must be an inflow or outflow under the changes in working capital, right? Depreciation and interest expense, fine, they're both positive. Why? Because interest expense, it is subtracted on the cash flow statement. Depreciation, it is subtracted on note number what? On note number 4, which is the fixed assets sold or purchased, right? So for now, here, you add them, but on the next step, or somewhere else, you're going to subtract them, right? So don't be confused on why they're positive. Yeah, it's fine. They're positive, right? So it's only under changes in working capital whereby your answer must be an inflow or outflow, right? Now, for the calculator to give you the exact sign that you need to record with, I repeat, for the calculator to give you the exact sign that you need to record with on your answer book, kindly say last year minus this year. For what? For both inventories and receivables. Sharp inventories we are already provided, but I can assure you, for them to get the outflow of 69,500, they said last year minus this year. Definitely, they said last year minus this year. Even with receivables, you do the same thing. You open your brackets, you take the balance for last year, you minus the balance for this year. Why are you doing that? So that the calculator can give you the exact sign that you must record with. Because we know that your answer must be an inflow or outflow, even if your amount is correct. But as long as the sign is wrong, your teacher's going to mark you wrong. So we're fighting for marks, we're looking for marks. So ensure that both the amount and the sign, they are correct. Now, for the calculator to give you the exact sign that you need to use, you say last year minus this year. Simple as that. With payables, you say this year minus last year. Inventories and receivables, last year minus this year. Payables, this year minus last year. Simple as that. That is the first condition you need to understand under receivables. The second condition under receivables you need to understand is that, sharp, you have the totals for the 2 years. You have the total for 2023 and the total for 2024. Please ensure that these two totals, they do not include SARS income tax. I repeat, you ensure the two totals, they do not include SARS income tax. On the balance sheet, yes, SARS income tax can be part of your receivables. On the cash flow statement, no, they are not allowed to be part of your receivables. Why? Because income tax or SARS, it's an independent note on the what? On the cash flow statement. It's independent. It goes individually. So you cannot prepare a note inside of another note. No. Income tax, it's income tax. Cash generated, it's cash generated. Therefore, the income tax must not be part of the two totals. Always ensure that you investigate how did the examiner get these two totals. If for 2023, the examiner gave you 2,000 for receivables, this year she gave you 1,500, go and investigate how the two totals were calculated. You know, you have to say the previous balance minus the current balance, but don't get overexcited. Don't get too excited. Ensure that you go and investigate how the two totals were calculated. Don't just use the the 2K and the 1.5K without being sure whether SARS income tax it's part of them or not. If it's part of them, remove the SARS income tax and remain with the correct balance or amount. Now, let's prepare this one. We look at information P. We focus under 2023. In 2023, we look at our receivables, right? We do not specifically have receivables, but we have accounts that makes up what? Receivables. I repeat, we do not specifically have receivables, but we have accounts that makes up what? We have accounts that makes up receivables. Which is what? We look at 2023, which accounts are we going to add up to get the total for receivables? I only see one account. There's only one account, which is what? Which is your debtors. SARS income tax does fall under receivables, but on the cash flow statement, SARS income tax is not allowed to fall under receivables. Therefore, for 2023, we are only going to take the debtors of 630,950. 630,950. This is your total of your receivables for last year. That is your receivables for last year, 630,950. Then for this year, again, we still take debtors only of 517,800. 517,800. You close your brackets. You take your calculator. 630,950 minus 517,800. 630,950 minus 517,800. You have an inflow of 113,150. Have an inflow of 113,150. That is how our receivables changed compared to last year. Now, coming to our payables, whatever explanation I gave under payables, whatever explanation I gave under receivables, it also applies under payables. However, with payables, there is one additional thing that is not supposed to be part of the total, which is what? Shareholders for dividends. So with payables, we know that SARS income tax and shareholders for dividends are not supposed to be part of that. Why? Because both income tax and shareholders and dividends, they're independent when it comes to income tax. Therefore, they must not be part of your of your payables, right? And again, we know that with payables, we say this year minus last year. We're going to say 2024 minus 2023 right now. We go to our information, we look at information B. We go to our current liabilities. We do not have the actual totals for payables, but we have accounts that makes up our payables, right? Focusing on 2024, which account or which accounts are we going to use for 2024? We are only going to use creditors control of 185,650. 185,650 minus what is the total for last year? So for last year, we're going to use two totals or two accounts, which is your creditors and accrued expenses, right? Creditors and accrued expenses, right? Anything else or everything else, guys, they can be part of your payables except for SARS income tax, shareholders for dividends, and bank overdraft. Why? Because bank overdraft, it falls under cash and cash equivalents on the net change in cash and cash equivalents. So you're going to say 298,650 plus 18,600. You have 317,250. 317,250. Yes, Maris, yes, it is. 317,250. Then you say 185,650 minus that. We have an outflow of 131,600. We have an outflow of 131,600, right? We have an outflow of 131,600, right? Then, how do you now get the final? Not the final answer. We now have to calculate our changes in working capital. We have a negative inventories of 69,500. So you say negative 69,500 plus 113,150 minus 131,600. You have an outflow of 87,950. 87,950. You close your brackets, right? 87,950. Now to get the final answer, which is your cash generated from operations, you say 1,054,600 minus 87,000. 950. Your cash generated from operations, you have, oh, I just hope this is going to be visible enough. You have 966,650, right? 966,650. 966,650. 966,650. That is your final answer for the cash generated from operations. Pause.